The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the April 11th Masters Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So the most important tool that each of us can use day in, day out is our questions. You see, questions actually are the answer. If you want a better life, ask a better question. You know the saying, ask and you shall. That's right, ask and you shall receive. Now, if you're not getting what you want out of life, it boils down to the fact that you're not asking the right question. You see, questions control our focus. Let me give you an example that reminds me, an example that moves me each time I see it and each time I hear it. It's the example of today's opening show, the Thursday opening show. Each of my openings are designed to put me personally into a peak physical shape. Each of my show openings form a question, at least form a question for me. Today's opening, Thursday's opening, the question is, in your life, Vern Lundquist says it, in your life, have you ever seen like that? That was brought to us by Vern Lundquist. I think that's a great question, and he was calling the shot heard around the world as Tiger Woods chipped in on hole number 16 at Augusta on Sunday, no less, to be able to take the lead and put him at 14 under versus the gentleman that was standing behind him, Chris DeMarco, who was 12 under. Chris had led the majority of the tournament. For me, the real story is the story of Chris, not the story of Tiger. The real story is the question that Chris asked himself right then and there with 2 holes left to go in regulation. He was down by 2. That's the story that pumps me up. That's the story that puts me into a peak physical state. That's the story that is rarely told. I've been friends with the DeMarco family for over 20 years now, and it's that story that moves me. If you want to move someone, you must first be moved. Now, most mortal men would have folded right then and there. After all, Tiger Woods just hit one of the best shots in the history of golf. And DeMarco, who had been in the lead for most of that tournament, folks, most of that tournament, was now down by 2 with 2 to play. Most mortal men would have asked that question, why me? Or what's wrong with me? But Chris is no mortal man. You see, he's a scrapper. He's a fighter. He's a man up to any challenge. And his question was, how bad will it hurt if I give this away? It's an amazing question because even though Tiger just made a miraculous shot, Chris was thinking, don't give this away. Even though Tiger had just gone up by 2, Chris is thinking, don't give this away. Chris is thinking, anytime you can make Tiger hiccup a little bit, you know you're doing something right. So let's go make Tiger hiccup. And hiccup Tiger did. Tiger bogeyed the last 2 holes, sending the match to sudden death overtime. Now, on the first playoff hole, hole number 18, Chris was just short of the green in 2. He chipped up, and when he chipped up, folks, he hit the flag. He hit the flag. The ball lipped out, missed the chip shot. Don't give away was his thought, and all through that rest of that tournament for those last 3 holes, the 2 holes in regulation, and then on 18, he did not want to give it away. He totally was fighting. He was a scrapper. Tiger went on to sink his putt for birdie and ended up going ahead winning. But in my opinion, the real model, the real role model out there was the way that Chris DeMarco went ahead and stared all those fears in the eyes out, stared them down and did everything he possibly could. He definitely did not give it away. It is Masters Thursday, folks, and if you want a better life, I think it's real simple. Just simply ask a better question. Let's go take a look at the questions here in this marketplace. Right now, a flat market. Of course, I think it was a flat market. I don't know if it was a flat market yesterday at the Open, but a flat market here today. Dow futures up about 8 points. You've got the S&P futures really flat up a quarter right now. NASDAQ futures down 7.5 points. Russell 2000 off less than a point right now. King dollar's not flat. Looks like it's back about 30 ticks. So we've got some movement in the currency marketplace right now. Gold futures are down or up 20 cents at 15.59. No big deal out there. Silver off 12 pennies out at 27.52. Light sweet crude down 28 cents at 94.37. Around the globe, let's go take a look at what's over across the pond to the east of us here, and that is let's go take a look at the DAX. It's up 31 points. Big day in the DAX, big day in the markets yesterday. We'll go take a look at what all that means. You had the DAX up right now 0.4%. The FTSE is up 0.3%, up 17 points. Over in Asia last night, the Nikkei up 261, continuing its move to the moon. I think it's bypassing the moon. I think it's headed to another planet out there. The Hang Seng, that's up 66 points. That's up, or was up 66 points last night, about 0.3%. And the Shanghai, again flat, down 0.3%, off $7. Our call-in number is 877-927-6648. Would love to hear from you. Let's go take a look at the markets here. Let's go take a look at the futures. Let's take a look at the daily futures here first instead of the intraday. Pretty flat out here. As we take a look at the daily futures, we were looking at the ES Mini 1556 and a quarter. That was the low of October 11th swing point. I didn't really think the futures would get up to the 1586.75, but in the overnight trading session, 1585.75, 1586.75 on the futures is the swing point high from October 11th, 2007. Nonetheless, a break above the bullish engulfing or bearish engulfing candle that was formed on April the 3rd out there. So that becomes your support area, which really is the high of the prior session, April the 3rd. That level 15, let me hold on a minute here. I know it's not right. 1568. I knew that was the right number. Just couldn't remember exactly what it was. 1568, the high of April 2nd out there. So certainly a breakout above our resistance here. I suppose really joining the party would get above 1586.75 out there. Let's go take a look at the NASDAQ futures. The NASDAQ futures also powering through a resistance area. The NASDAQ futures for over a month have been traveling sideways in this 0.786 Gartley sell pattern, but totally slicing through it yesterday. Take a look at that wide-ranging bar. On a scale of 0 to 10, that bar there is with 1 being the strongest, that's about a 1.5 out there. Take a look at that wide-ranging bar. The only reason why it's not a full 1 is you like to see it open at the low and close at the high. Just no wicks out there altogether. That would be your strongest bar formation that you could make. No, we're not talking about a small-bodied candle. It's when it's a wide-bodied candle out here. In fact, if you do take a look at the NASDAQ futures, we'll go take a look at here. I'll blow this up on the screen. If you're just listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. You can always watch this show streaming live to your smartphone. If you go to the homepage of tfnn.com, on the right-hand side, you'll see a button with 3 smartphones. Click on that. This will stream live. And, of course, you can catch the archive of this show on Channel 9. If we take a look at wide-ranging bars out here, let's just kind of go back to our left. Certainly we had a wide-ranging bar December 31st. And then a gap up on January 2nd. January 2nd's bar here, really more of that type 1. You can see, opening at the session lows, closing very close, very little wick there on that session high. Of course, the continuation pattern on that candle is anytime you get a close above the body out there. Inside the NQ, inside anything that it is that you're trading. So what you're going to want to really be paying attention to, you're seeing a little bit of a back off here right now, at least intraday. Maybe we see that for a couple of days out here. What you're going to want to really be watching is when this breaks above the close of yesterday, 2851.75. If you've got small-bodied candles, really much like if we take a look at where's the best example here on this chart of a rising 3-type pattern. Here we go. We've got a great one right here. So let's come back, and I'll blow this up on the screen for you because this is really one of the patterns you want to be paying attention to. Now, what we're doing, folks, is we're going back into the NASDAQ here, and the NASDAQ traded sideways between May 7th of 2012 all the way up to the time period of August 3rd, 2012. So quite a period of time, quite a bit of chop as it made its ascent. Now, the candle that we're really looking at, that we're focusing in on here is July 27th. July 27th, if you take a look at that candle, very similar to what it is that we just looked at from yesterday. Now, take a look at, now the difference is here, this played out. And this played out by having what? By having several small bodies out here. Don't pay attention to the intraday extremes here. You're just really focusing in on the bodies out here. A little spinning top, small-bodied candle July 30th, little doji-type candle on July 31st, all within, I'll just go ahead and put a line across the screen here because this is what you want to be paying attention to on any chart. It is the best way to answer, in my opinion, one of the best ways to answer where do you add to a position if you're already in it, or how do you play a momentum move out here. So this is just one technique, and it works really, really well, which is why I'm showing it to you. I wouldn't want to show you something that doesn't work well out there. So this works well. Now take a look inside this body here. Nice. Now this is called a rising three. I don't know why it actually, I guess it was a rising three because typically within three candles was the proper formation that the Japanese referred to it as. But the reality is 5 candles, 6 candles. I say, quite frankly, as long as they're small-bodied candles, my experience has been as soon as you break out of that and you've got small bodies, all you're doing is just consolidating gains out there. You've heard that before. That's all that was occurring back here in the time period of July 30th, July 31st, August 1st, and August the 2nd out there. And as soon as you get a break above that, that is a continuation pattern. Now, the continuation pattern has to be measured against, your next area of resistance. Well, where's that going to be out here? Of course, you're always going to look to your swing points. In this case, the swing point on that continuation pattern took you to May 1st, 2012. The actual NQ powered through that by a bit, looks like a little bit of an expansion pattern. Of course, once it gets above that swing point level, then you're taking a look at the next one. So always look at the left side of the chart. It will absolutely help you. So that's what you're looking at inside the NQ. But what's really important about that as we talk about continuation patterns, the reality is that based on yesterday, unless you see some type of reversal, what the NQ is also doing, another reason for it to pause here, just take a look at that last line I just added here. You had a little shooting star right up on September 21st inside the NQ. Of course, what it's done here, it's basically made a 100% move of a move. When you do that, it gets tired. It wants to just rest a bit. Watch for a continuation pattern, maybe tomorrow, maybe on Monday in the NQ. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The market's here pretty flat, so let's go take a look at the commodities section here, and then we'll go look at the currency. So let's go take a look at Goldilocks out here, see what gold is doing. Gold yesterday, taking back all of the gains really for the most part since April 5th, very close to it. April 5th, we had that nice bullish engulfing candle that really sets up as support here. The low of April the 4th, 1539.4. I go ahead and pull this stock chart back here. What you'll see, that black line of support out here, which likely will hold. You've got 359,000 contracts all the way down at the low at that 1535 level. Now you get a close below 1535, which we have not seen. We've seen that level tested on 4 different occasions out here, and each time with light volume. Of course, the very last time it had some accelerating volume, 259,000 contracts. That was on May 30th. The last time down here, just about 4 or 5 days ago, was down with 209,000. So that was 209 going against 259. Gold is going to need some giddy up and go in order to be able to bust through that area. Now, key here, remember, key is that this is a $265 consolidation level. So if that gets broken, if there's a close below, I actually would call for much lower price than I think I heard Tom or Larry calling for, because once you break through a consolidation area, and this has been consolidating ever since September of 2011 out there. So for about 18 months, maybe, because I don't know, somewhere around 15, 16, 17, 18 months out there, gold has been consolidating. But right now it's going to need more volume to bust through. What you'd really like to see is a test of 1535, and that we did not get. We did not get that back on April the 4th. It got down to 1539.40, and is it important to test swing points? And, it is. You can certainly, from a resistance standpoint, move your line up and down, but your ideal test out there would certainly be a test of 1535. And even if you did go long there, you've got your back up against the wall, And what's easy is if you get a break, which I mean a close below that level, then what you would want to do is you'd want to go ahead and exit that long position. Maybe it comes back inside the range, so you might get jostled around. You could go in and out of it, but you've got to realize it's a 265-point consolidation. All you have to do is take 265 minus 1535. Let's see, that would be 1335. That would be 12 something. That would be about $1,260 or so. I'm not totally doing the math in my head here, but somewhere around 1260, 1270. Now it'd be a longer term. That would be a longer-term price projection out there. But one thing at a time, yesterday's volume was about 126,000 contracts, really coming into 209,000 contracts out there. So it really still needs more volume on its push down. So that is on Goldilocks, at least my call on Goldilocks out here. If we take a look at silver, silver still traveling with inside that candle session from April 9th out there. So it has not, unlike gold right now, with regard to just comparing it to the trading session of April 9th, which was up with 32,000 contracts. Yesterday, down with 52,000. So pulling back with volume, that's not a good sign out here. But right now, what it needs to do, it needs to break the body of that candle, the low of that candle session on silver from April the 9th out there is 27.22. Trade down to 27.55 out there. If we take a look at light sweet crude out here, see what crude is doing. Yesterday, getting above the 0.382 level, trading out right now at $94.19. So once it's above the 0.382 retracement, you can see it pulling back a bit here today, but looks to me like, okay, it wants to go up and make a retracement all the way up to Sweet 618. That's what you're going to do if you're ever in the Clearwater area. You'll come visit us at Suite 618. Maybe it does a 0.786 retracement up to 96.55 out there, but it has closed above. Yesterday was a close above that 0.382 level, so it's above that next floor. We'll see if it can make its way up to $95.55. That would be the next stop. Let's go on to bonds here. What's that James Bond movie last night? Skyfall. It was okay. If we take a look at bonds here, we got bonds up traveling out right now at 146.05. It is tested the low from yesterday. The ideal trade on this now, I spoke about the consolidation area of gold as we took a look at that, a 265-point consolidation area. In the case of bonds here, the yellow boxes are a measurement of the consolidation area as well. That says that bonds should get to 149 level. Did not get there so far right now, pulling back. And the ideal trade on this, when you break out of a consolidation area, typically what will happen is the market will come back and it'll test it, just like Walmart did, just as many do out there. So eventually there will be a test. What you'd love to see here is you'd love to see bonds actually pull back, test the area of 144.29, reject that level. That, folks, would actually give you a pretty nice setup to go along bonds, whether that's a TLT, T something else out there, TMF, something like that. That's what you would want to be looking for. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing TigerTV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 3 points, composite off 9. S&P's off 80 cents. Russell 2000 down $1.16. Google up $1.68. Apple off $3. Microsoft down $1. Intel off 56 cents. Cisco down 18. Leading the charge, the upside, Netflix out there up 3%, up at trade out at 170 and change. Ross Stores, ROST up $3.55. That's up 6%. Acadia Pharmaceuticals, ACAD up $3.33. That's up 41%. Now that's a whopper. We'll go take a look at that. Wonder if they're out with some type of they're curing cancer out here. Let's see what it is. They are announcing an expedited path to the NDA for filing pimavanserin. My apologies, I'm not up on the drugs, but they are up a nice 40% here this morning. Toyota Motor Company, TM, up 3%, up $3.28. Occidental Petroleum, up $3. Zumiez is zooming forward here, up $2.46. That's 10%. Bed Bath & Beyond, up 4%. Leading the charge to the downside, Fortinet, FTNT, off 17% this morning. Totally getting whacked, so we'll certainly take a look at that stock chart. You've got Apple off about $4, trading out at $4.31. Apogee Enterprises, APOG is the ticker symbol. They're off about 8% here this morning. Chicago Bridge, CBI off $2. That's down 3.5%. Infinity Pharmaceuticals, INFI, off 3%. HP, Hewlett-Packard, HPQ down $1.40. That's off 6% this morning. And Microsoft down $1.28. Again, our call number is 877-927-6648. Let's take a peek around the currency marketplace before we start going and looking at these stocks that are popping and dropping. We'll first check in with the Queen. We've got the euro out here trading out at 1.3087. What is that doing? Well, number one, it's made a dead cat bounce. It's made a 0.382 retracement off of the highs here. The highs inside the euro Where's my little okay, great. Couldn't find my cursor there. Couldn't find my mouse. Now we're looking at the highs from February. The first out there out at 1.3709, all the way down to the lows that were put in here. The low was actually put in during the session of April 4th out at 1.2744. What you can see, the 0.382 retracement, that's the green lines going across my screen here. I'll blow it up just a tad. The actual 0.382 retracement of that is 131.13 out there. It also was running into, you'll see a black line of going across my screen. That is a line of resistance. It was resistance going back here into September of 2012. It was a tested area of resistance, came back through, did not hold as support, still using that line as an area of resistance. So what the euro, in order to prove itself, if you're looking for a further bounce, it's got some turbulence. That's the word I'm looking for. It's got some turbulence that it has to clear through. Candle-wise, the first bullish candle that really appeared out here, you had this little bullish engulfing candle right here on the trading session of April, the first out there, and then you had a little bit of a bull sash candle as well on April the 3rd. So you can see here's where the bulls really came in and were defending their position. No bullish candle right here on the trading session of March 28th. And then you've got these three candles that are formed right here, also referred to as three soldiers. I don't really use those as anything, nor do I really use three black crows. And not reversal candles, so just kind of nice names. That's it. But right now you've got the euro traveling into resistance. You get above this 0.382 level, that sets up a move to 133.41. But first it has to get above the resistance line and really get above the 0.382 retracement. That is on the queen. Let's go take a look at the Great British Pound out here. The pound giving, nice signals at the bottom now, coming and into and completing its next pattern out here, which is a 1-to-1 A to B equals CD. Had that nice hammer candle coming from an oversold condition back on March 12th. That was your signal to go ahead. If you were short, that was your signal to go ahead and close those shorts out or really tighten your stop up. You then got that next signal with that bullish engulfing candle on the following trading session, and then zoom, zoom, zoom. It goes ahead and takes off, runs into resistance, just like we were looking at on the euro. You can see I've got two lines drawn across my screen here as really areas of resistance. Those were old areas of support. Those were areas of support inside the pound going back into the 2010 time frame. So that area was broken. Now it is back above that. You can see that once the pound got above that, it came back and it tested it. Whether it's the black line that you want to use or the red line, there was a test yesterday. So old resistance now becoming new support. You've got an A to B equals CD. Your 1-to-1 is going to take you to 154.61 out there on the pound. We can also see it is running into that 0.382 retracement off of the highs, which were up at 1.631. That was on January 2nd, all the way down to that hammer low put in on March the 12th out here. I do like the way that prices move along the inside of that C to D leg. It is slightly stronger than that A to B move, and that was a powerful move for sure. So right now you're running into an area, the 0.382, that dead cat bounce area. So a little bit of resistance out here. I see a few clouds ahead, but it does look to me like what this really wants to do here is the pound wants to make a strong move. That strong move is that 0.618, where it will set up a nice Gartley sell pattern out here. But one step at a time, it needs to clear 154.08. That's on the pound. Let's go take a look at the Japanese yen here. U.S. dollar, Japanese yen, and it looks like, if this isn't playing out as it is supposed to, this would be potentially a cool trade out here. Now, don't do it from the ETF standpoint, only if you actually are trading the currency, because you can have your stop in place and get taken out of the trade versus being gapped up above or below your trade out here. Now, what I'm referring to is the 3 drive to a top pattern that was created here inside the U.S. dollar, Japanese yen on a daily chart. That your first drive, your first area that you're using or your measurement from is the high of February 11th out there out at 94.44. The next move, the second drive, came in at the swing point out here on March the 12th. That was a 1.618 expansion of swing points. What I mean by that, if you took a look at the high from February 11th, that 94.44 down to the low that was put in on February 25th out at 90.88. If you took that difference, multiplied it times Leonardo Fibonacci's 1.618 summation series number, and added that to the low of February 25th, that would take you right up around that level of 96.70. That's a 1.618 expansion. That becomes your second drive. Your third drive coming in yesterday. Now you can see it moved just slightly above the area that I had marked for the 3 drive to the top pattern. Actually got up to a high yesterday of 99.86 as it was making that. Obviously no bears in sight out here, and today looks like your first opportunity for the bears to go ahead and confirm this pattern. Now, this pattern is so cool because this pattern here is made nice Fibonacci, also made, a little bit above a 1.618 expansion on this third drive out here, just a tad above it. And what it did, if you just take a look at time, this has time and this has price, and the only thing it's missing is the bears, or are the bears. And that is what it is that we're seeing right now. A lot of time left in this trading session. This, folks, a 3-drive pattern is a significant reversal pattern, so you can afford to be patient. You don't have to try to sell the top tick right now. If this pattern were to work, you couldn't sell the top tick out here, and but it would be best if you were going to trade this, to do this if you were trading the currency pair, maybe the futures contract. Maybe you could go trade the 6J out there. That would be an option for you. But what you really want to see, the confirmation that you want to see on this today, is a close below 99 even. 99 even, Steven. You're at 99.14 right now. You get a close below that, and that sets up a pullback. A pullback to where, well, with how weak the yen has been in this trade out here, that one you're just simply going to have to be paying attention to on a day-to-day basis and watch for bulls to step back in here. A retracement, just a dead cat bounce. If this were the signal that this 3-drive pattern were going to work and you were looking at a dead cat bounce, the area that this could get down to, I'm not saying that it will, but could get down to, would be 91.28 out there, and that would be on the U.S. dollar, Japanese yen. So that's the currency market. That's paying attention to that. Now let's go over and take a look at some of these stocks here that are popping and dropping. Specifically, let's go take a look at some of these big percentage winners and losers out here. Acadia, so let me switch over to a different tab in my charts out here. We're going to first look at Acadia, ACAD is the ticker symbol. That is out it's up about 40% here this morning. So let's go see where Acadia, ACAD, yeah, come here. Refresh my screen. Don't tell me this. There we go. Okay. So we're looking at Acadia Pharmaceuticals. Let's go see what this thing is trading into. Boy, so, take a look at, let me pull this thing back. Okay. I've got to pull this back. So I'm going to put this on a weekly chart here just to give us a better view of what it actually is doing. But having a nice move up here. Let me put a few things on the chart, at least one other thing out here on the chart. Truly on the daily chart, weekly chart I've got here, truly in over bought territory. But right now what it's doing, it's taking on and getting above its most recent gap. We're looking at the weekly chart. There was a gap down in this equity here back in June of 2008. 12 million shares on the way down. Really that area on a weekly basis here was tested the last couple of weeks. Let me just draw a line across the screen, and we'll go take a look at the actual volume as well as that area was being tested, see if there was any kind of a signal that it was also given. So here's the 12 million share day, and as that level was being tested, sure enough, you were coming in there with 34 million shares. This was on March 22nd. Now, it gets up on the week of March 22nd, gets up to 824, closes at 757, keeps that area of resistance in there. Now, as we take a look at it, you also had a test the following week with 17 million shares. So lighter volume, little doji candle, says, okay, I'm a little bit tired. Backs off last week with 8.2 million shares. So that's after moving higher with 34, then 17, and backs off with 8.2 million shares. Now where is this headed to? Headed to the moon out here. Should be headed back to the highs. The highs in this could get you back to $17 and change out here. I don't chase this. But that is where Acadia Pharmaceuticals looks to be headed to and having a heck of a morning out here. Let's go take a look at what is not having a heck of a morning, and that would be, let's see here, that would be Fortinet, FTNT out here. That is down. Let's see, they were probably out with earnings before the bell or after the bell last night. Give me a moment here to see what they were out with, what their earnings were. Revenue, I'm not picking up on my screen, so forget that. We'll just simply go look at the chart. FTNT getting hammered today, down with volume. Had a high volume low as well. Looks like a couple of them out here. Its most recent, no, it actually gapped up. So here's an equity that is wacko. Take a look at this thing. Right now, gapping down into a swing point, doing it with volume. The volume so far today, 8.2 million shares, coming down into the swing point lows that take you back into November 15th, November 16th area, November 15th, 2.7 million shares, trading below that level. Let's go ahead and draw a line across the top of that swing point here, because this thing could be really setting up for some lower prices out here, because that would be your B point. Your B point on A to B equals CD down. Let's go draw the line actually along the bottom of this chart. So we'll see if this will hold. But this is going to be very important on this psycho-type stock out here. So the swing point that it's going against, this is the daily that we're looking at, is November 15th, 2012. $17.53 is the low, and only 2.4 million shares. Well, you've done well more than that already today. So if you get a close below 17.53, you would be breaking a B point of an A to B equals CD down. Let's go take a look at what that is, and we'll go ahead and pull this back even further. But if you take a look at this A to B equals CD down, starts out here, your A point is September 14th. No surprise there. September 14th all the way down to that swing point from November 15th. At your B, your C point out here would be the swing point high from February 26, 2013. It's got to close below it. It's got the volume. Question is it going to close below it? Are there bulls rushing in here for whatever reason to hold this in place? $14.66 if it closes below that $18.17 level. $14.66 would just simply be your one-to-one A to B equals CD. But let's put this on a weekly chart out here. Again, the ticker symbol, if you're following along on your charts, is FTNT. And now we have switched over to the weekly chart on this equity. And as we take a look at Fortinet out here, you can see it's really been traveling in a little sideways consolidation range that will take us back into the time frame of 2011. Just draw a line across the screen here. It is not down to the lows of that area. Well, that will be the black line that we put on the screen here. So it's trading. So if it busts, I think, let me go back here to the daily real quickly. I think it was 14-something. But on the daily, and then we'll compare that to the weekly chart. So 1-to-1 A to B equals CD, 14.66. Let's come back here to the weekly chart and see where the swing point lows are. Swing point lows are actually 15.78 back in September of 2011, but no real volume back in that time period. 10 million shares, 11 million shares the week of October 7th. There were 13 million shares the week of September 23rd out there. Well, we already saw today it had 8 million shares. So this chart is not updating for today's activity. So it had 8 million shares through yesterday. So not looking good here. If it busts that area, this is a large consolidation. Take a look at the consolidation top here, up around the $28 level to 15. That is $13. That's actually, you break the consolidation level, and this thing would want to come all the way back down to the lows back in 2010. 877-927-6648. Dow's up 15. S&P is up 1 point. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up about 20 points right now. Composite off 2. S&P's up 2. Let's take a quick peek here, see what the New York Stock Exchange is doing. NYSE is up 21 points out there. Now, the New York Stock Exchange, let's go ahead and pull up the chart on that. Let me find that. The New York Stock Exchange forming a 3 drive to a top pattern yesterday on the daily chart. Looks like it is trying to take that out. Now, if we take a look at time frames on this, let's go ahead and take a look, just like we were looking at on the Japanese yen. Your first drive here on the daily chart is February the 19th out there. The high is 9,441. Your next high comes in right here at the time frame of March the 14th out at 91.2889. That ended up being a 1.414 expansion of those 2 swing points. You can see time-wise here, perhaps cresting 1 day late, which would be yesterday, as it made that 1.272 expansion between the swing points of March the 14th and yesterday. The actual expansion between September February 19th, and yesterday is a 1.618 expansion. So we'll see if now this is the importance of being able to pay attention to this three drive pattern is when they fail. They really tell you that you've got some strong momentum. So the only real bearish stock pattern, I should say, in the of all the charts from yesterday was the three drive to a top pattern that was being formed in the New York Stock Exchange, trading slightly higher today. So not yet a complete failure of this pattern, but something you want to pay attention to. We were talking earlier as I began the show looking at the rising three or falling three candle formation. We were looking at the NQ out there. Of course, you can apply the same strategy to the ES Mini and so forth. They're great continuation patterns. And, of course, you're always looking to the left-hand side of the chart to see where is that next resistance area. Well, now in the S&P 500, you're up over resistance. That's what yesterday was all about, up and over the 2007 highs. So it no longer has any kind of drag. The only drag it's got out there would be the expansions, just simply Fibonacci expansions where things would, the other thing that the S&P should do that you'd want to do from a bullish standpoint would be come back and test 1576.09 just to prove its point that, okay, it's done, it's going to go ahead and break out. It's going to be a long-term breakout up there, and so that's really what you're looking for next on the S&P 500. So the only real bearish, now there's other bearish signals out there. There are certainly some divergences, but this market has ignored all divergences in the marketplace. New York Stock Exchange, is making new highs, making this three drive to a top, but the reality was it was not making higher highs when you took a look at the daily issues out there. So there was certainly divergence from that standpoint. Same thing in the Dow. The Dow motoring higher, but not making the same number of new highs as it had done several trading sessions ago. So there are some divergent patterns out here, but as I mentioned earlier, divergence, smivergence. Not that that's a word out here, but just simply the divergence patterns that have existed just simply haven't seemed to have had any kind of impact on the direction of the market. So another continuation pattern would be the New York Stock Exchange, would be a significant close above this three drive to a top pattern. What's significant? Well, let's just put the Fibonacci retracement up here. 91.9375 is the actual 1.618 expansion of the swing points from February 19th's high down to the low on February 26th. You can see we're not up there yet. So it's going to have to be maybe, let's say, 40 points above 91.93. That would be a failure of that three drive to a top pattern. So somewhere right around 92 and 92.20, something like that. Folks, if you're off to start your Thursday, remember it is Masters weekend all day long today, so should be some great golf out there. Have a great day. I will look forward to seeing you in a few or seeing you tomorrow morning. Take care, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.